Hello my French traders, Caroline Alizan here, graduate student of the Grok Trade Mentoring Program. It is Monday, June 20th of 2011 and we're looking at the Q's daily chart. And let's take a closer look at our formation right here at the bottom of our down leg, and which is the low base formation. So we are stuck in a tight trading range at the bottom of the drop. And what else do we see here? We are trading between both major areas of support and resistance areas right here between the 200-day moving average, which is right at the 54.72, which you see here in blue, and also the next area of support down below right here, which is at the 53.75 mark. So we are stuck between both of them here, and we are forming that low base formation, and we are actually trading between the high of Friday, which was at the 54.60 mark, as well as the low of Thursday, which was at the 53.62. So pay close attention to that one, because to all of the areas of support and resistance that I showed you here, because they're really important, especially the 200-day moving average, which is a key technical point on our chart. So keep an eye on it, because if we ever get a bounce, we could get all the way up to that 200-day moving average, which is at the 54.72 mark, and then we could either way, we could break through it and continue higher to that next area of resistance on our way up here, the 55.30 mark, and then if we ever get a breakout through that 55.30 mark, then we could continue higher through the next area of resistance on our way up here, the 55.85 mark, and then the next one our way up would be at the 56.60, and the next big one would be right here at the 57.15. So pay close attention to those. But if we do not get a bounce, if we do drop instead, we would first of all have to break through the 53.75 mark, as well as the low of Thursday, which was at 53.62. And once we do that, we would be in trouble, and we could head all the way down to the next area of support down below, which you see here in pink, which is at the about 51.30. So pay close attention to those. So again, tomorrow you need to pay close attention to the 200-day moving average, which is the 54.72, and then also the area of support right here, the 53.75 mark, as well as the low of Thursday, which was at the 53.62, and look for a breakout one way or the other. And what else do we see here on our chart? We are definitely in a pretty nice downtrend right here below all major moving averages. We are first of all far below the 50-day moving average, which is here in red, as well as below the 8 moving average, which you see here in green, which is my favorite moving average. And also we are below the major and key area of support, which was a support, acting as a support up here above it, and now we are breaking below it, which means that we are really bearish. But check this out, look at the MACD. I do see a little bit of a divergence on the MACD. The MACD is slightly rising, so it's making a higher high, a higher low, which means that we could get a little bit of a bounce. So watch all major areas of support and resistance right here that I showed you on this chart, and check this out. Look at the volume increasing on a down day and decreasing on an up day. What does that mean? I do not really like that. So if we are about to head higher, I would like to see a spike in volume, spiking above the average, getting closer to these highs right here, and that would be a pretty nice confirmation. So look for that and pay close attention to the volume as well, and also pay close attention to the MACD to look for a better confirmation. Alright, so hope it helps you. Have a wonderful day, and I'll talk to you again tomorrow.